a person drawing salary up to 12,75,000, one virtually lands up paying a nil tax. Job opportunities in Mumbai are going to increase up to 40 or 50 lakhs. My fellow brothers and sisters in India do not have to pay taxes, or they have to pay only 5% tax. Hi, my name is Mitil Chokshi and you're watching me on midday.com.
Hey, hi everyone. The Union Budget 2025 is out and there's a lot of buzz about what it means for the taxpayers, businesses and the economy. So to break it all down, we have the financial expert Dr. Mitil Chokshi, who is going to give us the key insights and the takeaways from this year's budget. So let's just have a quick chat with him. One of the key highlights of this year's budget is that there will be no income tax up to rupees 12 lakh. So how does the budget makes a significant relief for the middle class?
As you have heard, effectively, the tax slabs all the way from 4 lakhs to 12 lakhs, plus not only 12 lakhs, let me say it's 12 lakhs plus 75,000 for a person drawing salary up to 12 lakhs 75,000, one virtually lands up paying a nil tax. Nil tax, why? Because up to 12 lakhs, one is landing up paying 5% and 10% beyond 8 lakhs and beyond 4 lakhs, 5% to between 4 and 8 lakhs, and 8 to 12 lakhs will be 20%. But 12 lakhs, we will get a rebate of 60,000 rupees. Therefore, whatever is the tax liability will become nil, plus 75,000 is a standard deduction which one draws because of one having salary income. Mind you, this is only restricted to those having salary income up to 12 lakh 75,000, where I as an individual would pay nil tax. Now, if I had capital gains income like most of us, even though I had a salary income of 12 plus 75, over and above that I had an interest income or a capital gains income from my stock market index, maybe now it may be a capital loss, but if it's a stock market capital gain and if it exceeds 1275, then I would have to pay tax on that at 12.5%. Now, in my 12 lakhs, 75,000 is a standard deduction on salary anyway, but in my 12 lakhs, I had 7 lakhs of my salary income and 5 lakhs of my capital gains or my interest income. Then on 7 lakhs, I would land up paying tax at 4 lakhs nil, plus 4 to 8 lakhs will be 5%, and so therefore up to that it will be 5%. Plus on my 5 lakhs I would pay 12.5%. So effectively again my rate goes down, but that does not apply to me if I have other income other than salary income within my 12 lakhs.
Alright, could you tell us what will get costlier and cheaper for the common man?
Today what we need is data, what we need is mobile phones, what we need is EV cars, what we need is EV scooters, and all these of a certain threshold, of a certain value, which are of a smaller threshold value, all of these are going to be much cheaper. Why? Because the customs duty on the imported parts like the lithium EV batteries or on the LCDs which are used in the televisions or which are used in the mobile phones, all of those are going to be cheaper, and therefore the consequential benefit is going to pass on to us, therefore advantage to all of us.
Okay, do you consider that this year's budget is going to give better job opportunities for the ones who are trying to have that?
Full marks to our great team under the leadership of Narendra Modi ji and Honorable FM Madam. Yes, I will come to the certain negative aspects which I believe so in my view, but from a positive point of view and full marks in the sense up to 12 lakh 75,000 no tax, up to 24 lakhs virtually 10 or 15% tax. Okay, we are talking of so much of surplus disposable income in the hands of such a large volume, close to 80 to 85% of our population. Imagine if the surplus money is lying there. But why the full marks? Because they have come out with schemes for additional medical seats for education. That means those between 15 to 22 years of age have an immense opportunity for more and more education, especially in the rural areas. So that is one such opportunity. Second, between 22 to 35, not only is surplus going to increase in the hands of those who are youngsters, who are having a salary income between that, but also there is an extension of startup benefit to 2030, the tax benefit for startups. So which means that you could be a salary employee, you could also have your startup, which is what we want youngsters to do, and you have a great amount of opportunity to educate yourself in this very own country. And that is where the full marks go, because they are giving the impetus to the right area, starting from the age of 15 to the age of 30, 35, and this will be an exodus that we will see in the times to come.
All right, Mitil, one more question on that. On rationalization of customs tariff structure for industrial goods, 7 tariff rates are removed. So please explain how this will impact the salaried class.
So what are the 7 tariff rates which have impacted? Which are the sectors? Technology, you are looking at certain scrap metals, etc., which have to be reused and recycled. Then there are certain motorcycles, batteries, EV batteries, lithium batteries, etc., which have been reduced. So we are talking of these kind of sectors, right? The sectors which are the need of today, the need which requires essentially a reduction in the prices of usage, so that with the surplus income that this huge mass of population is going to have, not only will they be able to purchase, it will add to additional GST. Look at the collection that will be made. Look at the consumption. Look at the cycle. Over and above that, also there are some tax incentives in the real estate side, which will also enhance the people to motivate themselves to acquire more real estate. Yes, these tariffs are going to provide a great impetus for growth in the times to come.
This year's budget can bring any reduction in the prices of the essential goods or any reduction in the inflation. What would you say on that?
So, what are essential goods? In today's generation, for all the great youngsters like you, internet. Right? Internet, data, your mobile phones, all of that, if that is becoming cheaper for us, my essential goods are becoming cheaper. Yes, food, milk, etc., all of that is going to remain price sensitive, going up and down, demand, supply, etc. Yes, there is, but if you noticed, our Honorable FM mentioned about pulses, because nowadays everybody is on carb free diet, this diet, that diet, they want to eat more proteins. Pulses are proteins. So the push for proteins, the push for seeds, so that you have better crop and better productivity. So on one part, essential food items, okay, in a couple of years time you will have much cheaper, more efficient production. The other essential, the new age essential products, which is your phone, data, your EV motorbikes, your EV cars, becoming cheaper. Excellent. So this is the way to go.
All right. So if we see it through the perspective of Mumbaikar, then how will it impact their everyday life?
So for a Mumbaikar who has 2 houses, and I am being little ambitious, but for a Mumbaikar having 2 houses, owning 2 houses, one in Mumbai and one in their native place. Earlier, a simple provision, the one in the native place which was there had a much lower deemed let out value. So therefore, between the 2 houses, Mumbai would be shown as a self-occupied house and the native would be shown as a deemed let out, and some rent amount would be included, notional rent amount would be included in the income. But our Honorable FM said up to 2 houses you can treat them as self-occupied. So a very simple concept that yes, well thought through concept that yes, a Mumbaikar, for example, having 2 houses, efficient. A Mumbaikar using several products of daily life, and of course that is not only Mumbaikar, it is pan India. So therefore products of daily life, beneficial. Besides this, what I can see for Mumbaikars is that with the consumption growing more and more, with more and more consumption growing, the demand cycle is going to be keeping a pace. Keeping a pace, demand, supply cycle, the engine is going to move, the job opportunities in Mumbai are going to increase, and therefore obviously as good as any other city, but for Mumbai it's even better.
So do you feel that the no tax on the income up to rupees 12 lakh is sufficient for India to bring it in parity with the global standard?
This is where I have a little bit of reservations in the way, our dynamism should have overtaken, especially in the third term, our dynamism should have overtaken dynamism of the Honorable PM, and the FM should have overtaken the conservatism. And the dynamism And I say dynamism why? Because yes, US is our bar per capita, 80,000, 81,000 US on a per annum basis. India per capita 10,000 US on a per annum basis. We need to be EU around average good amount should be around 40,000, 45,000 US. Okay, we should be there at 45,000. Indians should be there. The middle class has to be there, and therefore that's where government has to try and give a fillip to the income in a manner that the tax is virtually 0 or 5% up to $40,000. 40,000 is close to 30, 35, 40 lakh rupees. So why don't we keep ourselves a bar that yes, in the next 5 years, yes, 50 lakhs should be zero tax, nil tax. I mean, and look at the surplus that will be in the hands of the middle class. If that surplus is in the hands of the middle class, look at the consumption, look at the GST collections, and that is the risk and that is a dynamism which should have been taken, because it is just I would say the right background, the right preamble and the entire layout is made for taking such risks, and which could have been taken in this year. Anyway, let's hope that that happens in the next year. This kind of a dynamic risk taking approach, which will not only lead to a massive consumption jump, massive GST collection jump, but also massive investment jump and rise in the stock market investments. I just hope that no doubt this has been very well thought through provisions of the budget, but some more risk taking would not do any harm, right, to the stature of these magnanimous personalities.
So, if you could change one thing about the budget, then what would it be?
So, if I had to change, and one thing which I would want is, I kind of already answered in my previous thoughts, is up to 40 or 50 lakhs, my fellow brothers and sisters in India do not have to pay taxes, or they have to pay only 5% tax. And that is what, if I had to change it, that is one thing I would change it, because that would create the jump that the economy needs. And with that surplus, because India is known for the middle class, India services the world through its middle class. Indian intelligence is in the middle class. The entire brain is in the middle class. So yes, the government has put in measures for fish exports, seafood exports, development of the marine the marine sector, also development of shipbuilding sector. They have put in impetus, incentives, startup extensions. They have put an impetus for AI center of excellence. Yes, all of that is there, but first and foremost, get my surplus right in the hands of the people who need to spend, and that is the middle class. If I have that in place for us, there is nothing that can stop India.
Do you also feel that the financial year term should change?
Yes, another important aspect. I mean, why don't we today, if I have to change, why don't we look at integrating with the world economy? Why can't we have a Jan to December fiscal year? Why do we have April to March? When we are moving so much with aligning our transfer pricing regulations to 3 years assessments, our place of effective management, or our extension of startup incentives. When we are having all of this, we also got promotions for gems and jewelry, which is one of our pioneering industries. So when we are doing so much, why could these smaller, finer nuances like a January to December financial year, also doing away with complete deductions up to 50 lakhs and completely no rebate, no new regime, just one regime up to 50 lakhs, and which is 5% or nil taxes, and then beyond that you take, and then about 25 crores of income you take an additional surcharge. There is no problem. If that could offset my loss, which I would do between this 15 lakh to 40 lakh, 50 lakh income, I think we would become a great place to be in, and that is what I wish that in times to come we will achieve. Yes, the direct tax code is also going to be coming in, so let's see what is there in store in the direct tax code.
So on a scale of 1 to 10, how would you rate this year's budget?
I would rate this budget as clearly a 7. It was predicted to be for the middle class. It has turned out to be significantly for the middle class. It could have been even better for the middle class, but some more incentives here and there, forgetting about the micros and getting into a larger picture and playing some kind of a risk-taking dynamism would have taken the 7 to 9, and which is what would have also been a more transformational budget. Yes, this is a critical, important budget, but it tends to be a little bit aligned on the conservative side, and I wish it was more aligned on the dynamic side.
That was an insightful discussion, Mitil. Thank you joining us and helping us understand the broader perspectives of the budget 2025. And we will keep updating you with all such vital informations. Until then, stay tuned with Midday India.
Subscribe to Midday India. Get direct notifications on all our videos by clicking on the bell icon.